Namaskaram. Today we are on a podcast and we have a guest, Sudhir S. Sudhir sir is from Aditya Birla Mutual Fund, and what is his responsibilities? He is taking care of a gift city business
Business.
for Aditya Birla, and he got more than 25 years of experience in the industry, and he's a principal officer there and heading the entire business for Gift City. So to learn about Gift City, I think you're the best person we got. So we are privileged and happy to welcome you to our audience.
Namaskaram, and thank you very much for having me here.
Yeah.
Really privileged for me to share my understanding with all of your viewers today
Okay.
about Gift City and the opportunities it brings to you all.
Good. Thank you so much, sir. We have a community of NRIs. We have in Kerala audience. We speak Malayalam, but we stay across the world. So we have an audience from different parts of the world. Those who are keenly interested to either come back or even if they are there, they want to have a touch here with their money and investment.
Okay.
We always have a question that how can I invest in dollar or how can I invest in more tax efficient way? So I think Gift City is the best answer. We
Absolutely
have,
right.
and a little bit of your introduction. Then we will move on to Gift City. So could you please
Sure.
talk about you?
I'm part of this organization that Aditya Birla Sun Life AMC for about 18 plus years now. Have experienced in across investment advisory to various investors, various types of investors. I've handled treasury businesses, corporate advisory, family offices, all in my profile. Also been deeply involved in the building sales and distribution channels for Aditya Birla Sun Life for all these 18 years. Prior to that, I also worked with a few other organizations for a brief period, like Carvi, SBI Mutual Fund, and as well as MetLife. And brings with me that the understanding and expertise in financial services market overall.
Okay, great. I'm sure that your experience will add a lot of value for me in personal and to the entire group. So we are trying to educate on Gift City as a whole. So could you talk about what is Gift City and why Gift City?
Yes. See, Gift City is a smart city, and a well planned, developed smart city in India. If you look at the one of the well planned developed city in India is Chandigarh.
Okay.
After that, we have been seeing various governments announcing that they would want to create one of those their state, or locations as a smart city in each and every state. But as of now, the first operational smart city is Gift City in entire India. The Gift City has got two parts into it. One part is a normal domestic area, so where it is a mix of commercial, residential, and other hotels and hospitals, colleges. Everything is there within the nearby kind of a vicinity, close to each other's. Walk to work kind of a culture which you could see there in those. But the other portion of Gift City is what is called International Financial Service Centers. So the entire Gift City is almost about close to 1,000 acres, about 970, acres. Out of that, the 220 acres has been notified as an SEZ, the Special Economic Zone,
Okay.
by the government. And there that IFSC has been established, that International Financial Service. So why it is important, why it has been established now, if we look at India, looks at that all the cross-border transactions relates to India is happening outside of India. That means any of the financial transactions with Indian individuals or a company has to do it with any other foreign currency, foreign countries. It all has to happen outside of India. Like if someone Indian company wants to borrow US dollars, then you cannot borrow it in India. So you have to go outside of India and maybe issue a bonds or maybe borrow from a US banks or kind of outside India. So because within India we don't have a free conversion of currencies. It's capital controlled economy, and we don't have the free conversion. So, and hence it all has to happen outside of India. Uh, our Prime Minister, Muslim Narendra Singh Modi, ji bought that like when India is becoming a has working towards becoming a developed economy, it is very important for us to curate our own international financial service centers and ensure that all the transactions, India related cross border transactions, which is happening outside of India, should happen in India itself. Okay. So they also look at a small country like Singapore. Today has become a global financial hub for both fund management and other financial transactions. But in a country like India, which is so vast, but we don't have that kind of a capability or the center which we have built, and hence they set up this international financial service center. So where the currency convertibility is allowed, it is fully on a fully conversion basis. So you have can do multiple financial services can be undertaken from here, which are in other than INR terms, and it is also benchmarked with many other leading financial service centers which are there across the globe, like Singapore or New York, Ireland, Mauritius, Cayman. So the few of the financial service centers which are there. So it's similar to that of in India also. This has been established in Gift City, which is in Gujarat, which is established, which is placed in between Ahmedabad and Gandhinagar.
Okay.
So
Okay. So this one, what are the firms are there in Gift City, especially IFSC?
yeah, in IFSC, we have as of now almost 800 plus entities have registered with IFSC and established their businesses, starting with banks. So almost all the private sector, public sector, and multinational banks have established their banking units in Gift City. We have NSE and BSE have established the stock exchanges. We have a bullion exchange. We have this fund managers who have set up fund management offices here. All both MNC fund managers or Indian fund houses have set up their office. Then we have stockbroking firms are available. Then we have fintech companies, techfin companies are available. Global treasury centers. So these are various lines of businesses are allowed to establish. That's a multi-service financial services.
Okay.
Financial service center is what we could call it as.
Okay. So that means customers can open bank account there and invest their money. So just to curious, because we have a lot of people investing in FCNR, this thing.
Right.
So how is it, if at all, you can add some?
Yes, investors can open, NRIs can open, FCNR deposits in Gift City. They can also open NRE accounts also. So the FCNR deposit, and they can also open foreign currency, US dollar accounts itself.
Okay.
There directly, so that they can also have both dollar accounts as well as FCNR deposits.
Okay.
And the benefits are higher. Because in India, when you're opening an FCNR deposits, you need to go for only longer tenure.
Okay.
You don't have much of the shorter tenure deposits could not be done. Whereas here, when you're putting your deposits in Gift City, you can have multiple. You can start with even 7 days, 14 days,
Okay.
1 month, 3 months, 6 months. You can have a various tenure. So you can actually plan your financial transactions in a much better way through the deposits in anything. And these deposit rates are obviously better than those what you get in offshore. So, and incomparable or with the FCNR rates which you get in India.
Okay. So I think people need to identify which bank have branches there in Gift City and explore those opportunities.
Yes, I think it's easily available. So probably they can visit this IFSCA website.
Okay.
So there is a directory which gives a list of all the banks who have an offices in Gift City.
I think that is a place where we can see how many AMCs also registered.
Absolutely. Right.
I think.
All service providers list is there.
Okay.
So maybe along with the contact number, and also you would be able to get, so you can. They can easily access this data.
So coming back to our investment as a opportunity. What are the options available for an investor to invest in route?
Yeah. So in Gift City, we fund managers are allowed to do different types of funds. One is called AIF structures or restricted schemes.
Alternative.
Alternative investments. So restricted schemes. which is similar to that of in India, we call it as AF. You can also have a PMS, portfolio management service there.
PMS. Okay.
And then third is a retail scheme. So when we talk about category restricted schemes, it could be category 1, category 2, or category 3 funds. Category 1 fund is basically more of angel funds, venture funds kind of thing, or social impacting helpful funds. Then we have a category 2 fund, which are more of private equity funds or anything which invest into the unlisted securities. We also have
Pre-IPO kind of.
pre-IPO, or we can have fixed income funds there, like the structured credit fund, or a real estate fixed income
Alternate
fund,
to FD kind of.
alternative FD kind of a startup. And then category 3 funds are mainly investing into the listed equity or listed security space. Now that retail schemes are also there, retail schemes are something very similar to that of mutual funds. So with a smaller denomination of investments. Whereas the category 2, category 3 funds will have a higher denomination of investment, like minimum investment would be $150,000 and above.
Okay.
So whereas here for in a retail schemes, the fund manager can set up anything maybe 5,000, 10,000, 20,000. So regulator has not fixed any minimum investment.
Everything is in dollars.
In the dollar, yeah. So these are all can be not exactly as a dollars, but it should be anything other than INR.
Okay.
So what we as a fund managers are doing is that we set it up in dollars because it's easy access for people from any country.
Okay.
So because we would be marketing this fund, or would be on getting the investments from across investors from NRIs from all countries. So we don't have any restrictions as such, and hence dollar would be a better currency from a liquidity perspective.
Okay, but is there any option to invest in other currency?
We can set up a fund in other currency. So if the fund if we set up a fund in euro, then I can accept money in euros.
But currently, do we have that in Aditya Birla Road?
No.
All are in dollars.
So we have all started with USD itself.
Okay. Even PMS also work similar ways at DMAT, and fund managers decide this thing, right? So
right.
One broker should be there in Gift City to manage that.
Yes, portfolio manager will do that, and from there, NRIs today can easily invest into India. But other than that, for foreign investors, PMS is not a great route because of the other regulatory requirements are there. Like they have to register with SEBI as a foreign portfolio investor and invest. So for them, for the most of the investors, AIF route is the best route to invest.
Okay.
Yeah, NRIs can explore to come into India through the PMS route. But however, that channel is already available for them to do it directly in India itself, in the mainland itself. Global fund is another opportunity which some of them can explore to invest through the PMS route.
Okay.
Yeah. So because Gift City is not only providing an opportunity to invest into India, it is also providing a platform to invest in global markets. So both opportunities are available.
Okay. So investors who are coming to India can use Gift City, especially people NRIs and people with different country citizenship. Foreigners also can invest.
Yes.
And institutions from outside.
Right.
And Indians, if they are investing, they need to go with the LRS route.
Yeah. So in Indians, we have two entities. One is individuals.
Yeah.
They will be investing in global market through the LRS limits. But whereas for the corporates, we have a separate limit called OPI limits. OPI route, overseas portfolio investors. So there they have a limit of 50% of their net worth to invest available to invest in the global
companies.
markets.
50% of the net.
Companies, it's a 50%. So companies means if it is in a LLP format, partnership, private limited and limited companies, they have the limits of 50% to invest in global markets. Whereas individuals, they use the LRS limits, which is $250,000 per person per year.
Normal, whatever LRS thing.
That's true.
And mainly, when we people invest in this route, what are the basic document requirement for foreigners and for NRIs?
It's the same documents with whatever if they're investing in their home country or in India, what are the minimum documents which is required? It's the same. That's because all of us are part of FATF thing, and we all have to do the KYC, know your customer thing. So the documents remains the same as identity proof, address proof, and tax residency. So the tax residency is called in different names in different countries. So it is either called a tax identity number or a permanent account number in India or a tax residency certificate in Middle East. So those are the things. Identity proof, yeah, same. Your passport or any other government issued cards would be valid. Address proof, yes, it goes same thing like your bank statements, or if the passports are capturing those addresses, it's fine. If it is not capturing your current address, then any other address proof like energy bills or bank statements is also valid.
So, in terms of fund management expenses, how it, because when we look at it, we have a fund management charges, we have a, so how it works. So, you can,
Okay. So the fund management charges depends basis on the opportunity which is there and how it is structured also. It could be different ways. I can explain what we are doing it. So we have a fund which is investing into mutual fund scheme, right? We have set up a Gift City Category 3 alternative investment fund in Gift City, which will invest into the mutual fund units of our own Birla Sun Life Mutual FlexiCap. So in this structure, we charge about 1.3% as a fund management expenses the fund, and it goes down as the amount increases. Then the fund, this Gift City fund will invest into the direct plan of mutual fund scheme, which charges about 75 basis points of it. So totally about 2% is what the
okay.
total
So,
expenses.
fund management in India charges for direct 0.75 and
Yeah.
at
And
Gift
at the
City
Gift
fund
City
level
level, it is
1.3.
about 1.3. So totally about 2%. And again, operational expenses could be another 10-15 basis points. Is a 0.1 to 0.2%. So totally the total expenditures of the fund would be in the range of 2 to 2.25%, which is very similar to that of what if some investor is coming in and investing into a mutual fund. Whatever the expenses he pays here, we are also keeping it in the similar lines, so that the investor when he comes, he's already investing into India, in mutual fund schemes of India. So if he is coming through the Gift City, what he or she should get is more the convenience and the tax efficiency than not the extra expenses,
Okay.
extra cost.
So,
Yes.
for fund management, three charges there. One is at actual funds expenses, then Gift City level fund expenses, then operational expenses. That is
Yes.
a fixed one. Depends on the fund size, it can
Yes.
come down.
Yes. So there are different funds will charge different fees, because some funds will charge the fund management fees, and they will also have a performance fee. That means above certain performance, they will also have a sharing. So investor needs to check these details when he's evaluating the scheme. But with what we are doing is only plain fees, fixed fees.
Is it upfront or monthly basis?
It is on the NAVs daily,
NAV.
because these funds are all having an NAV. It is all annualized basis charged the accrued on a daily basis to the NAV.
So NAV published on a monthly or
Daily.
daily?
Yeah. So we have two different funds are there. For India fund, which NRIs would be keen on investing it. So there we have a daily NAV. We also have a global fund which invests into global markets. So there it is a monthly NAV. So NRIs can invest in both of these funds.
Okay. So this one, how it get reported is a email or any online facility is there for client to view?
Monthly statements will be sent across to them on every month basis. So that, and on a quarterly basis, they will also provide, along with the statements, they will also get the portfolio details also.
Okay.
All will be provided to them. Currently, it is all in a developmental phase. It is not as well developed as in the mainland India mutual funds, because it has become, it's over a period of 30-35 years.
Correct.
It has reached certain scale, and support system or ecosystem has been well built there, technology and all. Now in Gift City, it is just about new. It is all getting built.
Okay.
Yeah. So over a period of next maybe a year or so, they would see lots of development would happen on the technology side. But currently, yes, the information flow updates are all very similar to that of India. So they will all get once they make an investments, they will also get a statement showing their investment details. On a monthly basis, they will get those monthly statements which shows their what is the value of investments. On a quarterly basis, they will get those portfolio details, where they have invested, what is the portfolio looks like, what is the sectoral allocation,
Yeah.
stock specific allocation, everything they will get to know
Okay.
quarterly.
So, okay, then how does the tax work in this case? So, if at all, in Aditya Birla, you have two methods, right? One
Yeah.
is that invest in global fund.
Yeah.
Another one is in flexi cap, so which is in India. So, the fund of fund.
Right.
So, could you explain that how taxing work?
Yeah. So the gift city brings a lot of tax efficiency for the investors. Uh, in this through structure of feeder fund from gift city to mutual funds, that's a benefit. There is no tax in India at all. No withholding, no TDS, nothing. Investors just comes invest in gift city fund, so and they take back the money. No TDS, no withholding tax here. Mutual fund also, when they buy and sell, they will not pay any tax. Gift city fund also, when they buy and sell the mutual fund units, they don't pay tax because they're exempted from tax here. And investors also, when they buy and sell those gift city fund units, no withholding tax or no TDS. So end to end, they will not have any tax here. They don't need to file IT returns specific to gains here. They don't need to wait for any refunds or any such. So just come invest and take the gains back. If at all the NRIs has to pay any tax, it would be there in their home country, if anything applicable there.
Okay. Okay.
So nothing in India.
No fund level tax.
No
Because
fund level
I'm just
tax.
clarifying because there is a
Yes.
question from client side because AIF they charge at a fund level,
Correct.
but in Gift City,
Yeah. So in the gift city, the fund is exempted from tax under Section 10(4)(d) of the IT Act, and hence we will not be deducting or paying any tax on behalf of the investors.
okay. So if at all that AIF is investing directly into stocks, in that case, how it will work?
Yeah, in that case, then whenever they sell the stocks, they have to pay the tax at the rate of 12.5% or 20% basis the holding period.
Okay, that is at a fund level or in individual level?
It's the fund level.
Fund level. So
because every time the stock is sold, the fund is selling the stock.
okay,
So whenever you sell it, you have to pay the tax.
okay. So once the profit or fund is ready,
gains.
client do not have to pay any extra tax.
Yeah, so he will not have to pay any tax, but this tax is already deducted.
Okay.
So many times, whatever be that to the extra the tax which is paid here, which is attributed to a specific individual, then it is actually the individual is paying only.
Okay.
Whether it is paid by the fund or the thing,
Okay.
one level of taxation is
Fund
already.
level tax, but
Because this taxes what the fund pays, the investor would not be able to claim or take the refund
okay.
because it is happening at the fund level.
Fund level. Okay.
Yeah. So
But ultimately, expense is bearing from the customer.
correct. So that's why here this mutual fund route we are providing those solutions.
Okay.
Where here no tax at all, so and hence there is nothing you lose out. You actually gain those 2, 3, 4%, but otherwise it would be your returns would be lower because of the tax.
Okay. And another thing, if you have another fund, global fund, right? So
Yeah.
that when it redeemed at their location,
Yeah.
there do we have to pay any tax?
Yeah, there also is a the structure. It is structured in such a way whenever the stocks are sold, like if you have invested in US companies, if I'm selling a stock there, no tax is paid there, no withholding of tax.
Okay.
Again, the money we are structured through a feeder fund in or master fund in Cayman Island. So in Cayman Island also it is an exempted entity, so no tax is paid there. Entire gains will come to our India fund, Gift City fund. In Gift City fund, for resident Indians, there will be a tax on thing. So whereas for non-resident Indians, there is no tax. So entire gains are again passed on to them, and they are liable to pay the tax in their home country, if any.
Okay. Okay. That's good. And what about that exchange when the currency converted, right? That conversion charges. So how it work? Is there any expenses there?
Yes. See, currency conversion. We always, if you have to invest into India, definitely there will be a currency conversion which is required because we are raising the money in US dollars. My fund will accept all the purchases into the fund is made in dollars. All the redemptions also is made in dollars. But when we are investing into India, so we have to convert into INR. So since we are all institutional, people dealing with banks, our volumes are high. So we negotiate for a very fine prices like 1 or 2 paisa kind of a thing. It's very small in that conversion. But however, the investors will be how to understand that. Yes, when we are converting into rupees, if there is any the value between dollar and INR, if there is any changes, that's up is impacts the investments.
Okay, okay.
Yeah, so that means if rupee depreciates, rupee value comes down against the dollar, it the value of the investment also
Yeah,
comes down.
that is
That the
understood.
investors are
Yeah,
available. But again, it otherwise it also
yeah. But that conversion charges, whatever you guys are charging. And another thing is that for NRIs, they may be having fund in NRI as INR form,
yeah,
and they want to invest in this fund, so they have to transfer that into from INR to USD.
right.
So that also that expenses incur there.
Yeah, that is a investor has to incur that thing because because my fund accepts only in dollars.
Okay.
No, so and your NRE NRO account is in rupee terms. So we accept money from NRE NRO as well as their foreign bank account directly.
Okay.
So they can use any of these three sources to invest into this fund. Yeah. So, but only thing is that here in NRE and NRO the money is there in the rupee terms. So NRE account it's fully repatriable, so there is no limit. But however, NRO there is a limit of $1 million for repatriation.
Okay.
So to that extent, they have to convert from rupee to dollar and
Oh,
invest
so
into the
which
fund.
means NRE who have account in NRO also can invest.
Yes,
They can
but only to the extent of the repatriation limit.
1 million per year.
Yeah, right.
Oh, okay. That won't come under LRS.
No, it
No,
would
it's a
not
different.
become. Yeah, yes.
Okay, so which means NRE means no limit, and NRE means no limit, NRO means 1 million, Indian means LRS 250.
That is only Indians.
Yeah,
So when
Indians,
you look at NRIs, if they're bringing the money from their home country, again no limit.
Okay.
Okay, assuming
No,
someone
understood.
is in Dubai wants to invest in this India fund
Okay.
or a global fund,
Okay.
no limits.
Okay. No, that's a good thing because even from Middle East point of view or any one, when they come into invest in India, they look for opportunities where how they get because they also want to invest in US
Absolutely.
and they may not know how to manage that fund
Right.
or they don't know very clearly that which broker they can really work with. They may be comfortable working in Indian-based advisors and brokers.
So that is why we have structured this fund, or we have a ABSL Global Blue Chip Fund in such a way that we can accept money from NRIs and foreign companies or foreign investors also, so that we provide a well managed, curated investment options for them.
Okay.
So because it's India, everyone knows that India is a growing story. It's a growth story. There is lots of opportunities there. But along with India, from a diversification purpose, and for also looking at there is many other countries, many other companies in globally are also growing or offering very good returns. So we also know that there is a altogether new set of companies which are there, which is not the teams are not even in India. Like most of the technology creators are not in from India. So we are more of technology users.
Okay.
Right?
Okay.
So all those technology companies which are part of US, which are listed in US, you get to invest in them. So you get to be part of their journey and create wealth. So that, and NRIs also will have these options because they can, from the same source, they can invest both into India as well as into global growth. They don't have to go into approach different people.
Okay. That's very useful. Even
manage their funds.
from Aditya Birla point of view, you have two funds now. So one is a flexi cap, which is Indian flexi cap mutual fund. You are allowing to come through this route.
Yes.
And another one is your global fund, which
Global
you have
blue chip equity fund.
So which means all in global companies, which is bigger in size.
Yes, we invest in large cap companies, blue chip companies, blue chip of the blue chip companies, globally, and we invest in only about 25 to 30 focused, high conviction stocks.
So it's a clear Indian type of a focused fund targeting entire globe.
Yes, you may call. So yeah, we have very high level of screeners. We focus on companies which have free cash flows, so who are not debt oriented, who doesn't have a high debt equity ratio, who are all have a free cash flow of 18 to 20%. We are looking at the companies who are investing into various other businesses. The return on invested capital also should be about 18 to 20%. The company should be consistently year after year, the earnings should be growing at 10% plus in dollar terms. So, so
10
that is how
percent.
we have made very high screeners, and these companies should be monopolies or duopolies in their business. That means their market share in their businesses should be upwards of 40-50%. So in our portfolio, we have companies starting with 40% market share in their business up to 97% market share in
Okay,
them.
okay.
So these are all comes with ability to not only just as creating returns to the investor, but also comes very handy in terms of risk management.
Okay, okay. That's good. And when it comes to investors' point of view, so people say that they want to invest in dollars, and they come to dollar-denominated funds,
Right.
and so that time they are investing in dollar, but they again converting into INR and investing. Ultimately, they are not really getting the benefit of dollar appreciation. So in that case, come through this fund and invest in global fund will be the more appropriate.
Yeah. See, these are two different opportunities. One is that, yeah, here the investor who brings in dollars, who gets back dollars. But again, that one beautiful thing is that in a global fund is that you're investing again in US
US
markets or
market.
in dollars. But again, from that, if I have to invest in Europe, then I will be having that some conversion of money into which is going to in euro also, right? So here, rather than the small the factor of currency which will always be there, but we try to manage that through in our portfolio construction. And much bigger opportunity is that if you're most of the currencies do depreciate against the US, right? And hence automatically, if I am investing in euro is depreciating against the dollar. My INR is also against depreciating against the dollar. There is a cross hedging happens.
Okay.
So you gain here, you lose there, but you gain here in India. So that way, investors के लिए investing in a global fund, currency risk is very very minimal. Actually, they would most of the time they do gain from the currency movements. But from an India perspective, yes, you are looking when you are investing into India and from dollar terms, yeah, rupee do depreciates, and historically it's been depreciating in the range of about 3%. To that extent, your return comes down. But however, if you look at the big opportunity, it's still very high. So, for example, if you look at most of the flexicap funds, including our own fund, has given about 21% CAGR returns since inception. So even if you take an average return is about 18 to 20%,
Okay.
right? In
No,
a
that's
flexicap
India growth
category.
story.
Yeah, India growth story. So you are 3%, even after those 3%
Yeah.
rupee depreciations, you still have a thing. And again, when the person is investing in a dollar terms, there is a depreciation of 3%. Someone is from Africa, right? Other than that, who is where that currency is not pegged to dollars. So their currency is also depreciates, right, against the dollar, and INR also depreciates, so that it's natural hedge. So he doesn't lose anything there.
Yeah. No, it's a good thing. Only thing is that as an investor, do a proper financial planning to understand that
Yeah.
what is allocation you should give to outbound US based fund, and what is kind of allocation you should give to Indian fund.
Absolutely, I think that is where that our all our advisors comes into picture, because most of our NRI investors, they do take the advice of our mutual fund advisors to invest into India. So now, particularly for global markets, probably they were not able to take their benefits because these products were not available earlier. So now, from with the same advisors who knows about their investment in India, he can also guide them on their global investments. So the same person can advise them and take care of their overall portfolio
Yeah, correct.
thing, and he knows that better how much to allocate, how to what to do and all. So
Correct. There is a lot of questions that where I can invest in a dollar, and
yes,
because there is a lot of requirement for Indians and NRIs. Their children may be going for education abroad. So if they can accumulate fund here, this is an opportunity for them to accumulate their wealth in dollar terms.
absolutely true. So people who can hold that in dollars itself, so doesn't need to convert into their currency.
Correct.
So today the privilege is there, then they can continue earning. See, because these investment options also has good investment options which offers them good growth rate.
Correct.
So continue staying and take it out whenever you need for that. So good place to accumulate your dollar savings.
Yeah. Any plan for Aditya Birla to come in retail space?
Yes, definitely.
Yeah.
So we have just started our journey with this non-retail schemes. So we have closed one fund about 3 months back. That's a Global Emerging Market Equity Fund,
Yeah.
which has done about last 1 year performance is about 25% in that. It's done very well. So and hence now this year we have started with one global blue chip fund for global investments, and again India FlexiCap fund for India investments. These two funds are going well accepted, have a good track record, and as on date performance also been good. So next is that we are continuously evaluating to add up more investment opportunities to uh, this thing on both the sides, global side as well as on the
Okay. Okay.
India side. So we'll bring in more investment opportunities. And retail is also definitely on the cards. So next, because yeah, as investors are getting more and more aware, and for retail investors also who been investing into India mutual fund schemes, Gift City is definitely offers a better tax efficient returns for them.
Okay. Okay. I think it's a great for Indian and even NRIs and foreigners to come to India to this particular route.
Right.
And looking forward, actually, this is something which from our industry also we can offer another product which we get a lot of offers, or we get a lot of demand that especially in Middle East, there are a lot of insurance company there. They offer ULIP sort of a
Okay.
product there, and that is also actually speaking expense ratio is minimum 5 to 7%.
Oh, okay.
So I think this route is much better.
Absolutely. See, because here we all are aware that SEBI has been consistently focusing on ensuring that the expenses should be kept as
Yeah.
minimum as possible. They've, and again, they've made lots of changes. They've brought in regulations to do that. So now the same thing, and investors, advise, everyone is so well aware of that India funds are the lowest expenses. And the same thing which we are also in Gift City also we are adopting the same thing. So when we are structuring the fund, we are ensuring that the expenses should be something similar to that of what in India which has been there, because people are already exposed to that. And within the same thing, but bring in that new investment opportunities, new more tax efficient investments, and newer opportunities for other people. Like for example, NRIs are investing in India, but today, if you look at many of the NRIs are also owns businesses and companies outside India. They would also have some surpluses in the
Correct,
company
correct, correct,
name,
correct.
which they are not able to invest now. Right? They somehow would be kept in deposits or maybe some other outside India funds, but not able to take this benefit what India offers. So through the Gift City route, it's not only the individuals,
Yeah.
even those companies can invest into India through this tax efficient route, and as well as in a much cost effective manner.
Correct, correct. We are personally looking forward a lot.
Yeah.
And
If I may have ask you one,
yeah,
as of now, how is this our NRIs are investing into the global markets? Because we know that
yeah.
India they are doing through mutual fund investment through all of you. They are investing in India. But how is about global money?
Global, there are multiple things, right? Because especially our Middle East people, they invest through more of a insurance route. So there are various international insurance firms in Middle East, and they invest thinking that it's a global investing. It's a correct one, dollar investing, but the kind of return they get is very minimal, and the lock-in period surrender value is very less. So it's very nice to hear that it's a global, but when we really do the annualized interest and rate and everything,
Okay.
it's a very minimal. I have experience when I was in Dubai. I met one person. He was accumulating some money, and he was hoping that he can, take that money for his sister's marriage. Then he understood that there is a, that's lock in, and the surrender value is very less.
Oh.
Then what he did was that he had to go for loan.
Oh.
Actually speaking, that money which he has accumulated in Indian, if he would have invested in Indian mutual fund that time instead
Okay.
of that
Right.
one,
Right.
he would have done the marriage, and half the money he would have kept it.
Absolutely.
So that is more of a awareness issue happening. So I think that is a one route, and people who know market, they are opening account in some brokers and investing and everything. Mostly they try their luck. They hear that, okay, this company is good. Let me put that money. So everyone is go behind all this thing, and people have lost money in Twitter also. So people thought that Twitter is going to make something else, and people invested in
Correct.
Facebook
No,
directly. So
absolutely. See, that is where I think, see, for all these investors coming through a fund management route, because all these investors have experienced how mutual fund has supported them and helped them in wealth creation over years. The similar kind of structures and funds we are offering through Gift City, even not only in mutual funds, even in in global funds also. It really would be very important for investors to evaluate these options than looking directly. I'll give you a simple example. In around March, we had seen lots of, once the tariff things have started off, so lots of volatility in US markets. We'll take two stocks, like one is a Tesla and another is Nvidia.
okay,
Both stocks fell drastically, so almost 20-30% of the stocks fell. Many investors who had invested suddenly saw they had lost money and they also exited, because
correct.
what happens is that, yes, these two kind of volatility do happens. You cannot avoid the volatility, but taking the right decisions at the right time and understanding it, why is that volatility happening, is very important. So here investor doesn't know what is going to be happening, whether he should hold or he should exit. So many investors exited. They had Nvidia shares, very good. They still exited. They had Tesla. They would have exited that. If you look at after 3 months, Tesla has gone up than where it was. It's much higher than that now, but Tesla is still down. So it's all about which stock to hold, which stock to sell, and why is that volatility happening? Because even in March, even that volatility happened, if you would have still held on to it, you would have still made returns.
That's a fund manager can take a call.
Yes. So,
Then
but yeah, the people do try to look at that names like and do, but the evaluation of that in terms of bad times, in terms of volatile times, is what they could do it. See, their stock selection is good, but they don't know what to do when there is a volatility creeps in.
yeah,
So that is where the fund manager brings in that valuation there.
correct.
Even in the in the worst time, he knows what to do, which stock to hold, which stock to sell, which stock is the right one to buy, which stock is not the right one to buy at that any specific time. So that really matters, and that's a valuation which we bring it to all the investors.
Correct. It had a lot of things, because even India also, we sitting here in India, we are finding it difficult to value the stock. So just imagine sitting here or sitting in far nations and evaluating company in US or Korea or
Yeah.
China. No one knows
Absolutely.
how to. But yeah, this is a regulated product. A knowledgeable person is evaluating. That is one
That's true.
good thing. Yeah. So, what is the final advice or final comment for this product to the audience today? You have.
See, we have NRIs who've been investing into India, particularly to the mutual fund schemes and various other investments. You should start looking at Gift City funds, which is investing into mutual funds, because it's definitely tax efficient. You don't need to file IT returns. You don't need to wait for refund, because particularly Middle East investors have a tax exemptions. We have a good double taxation avoidance treaty with India. So mutual fund investment, though there is a withholding tax happening, they still get the money back, but for which they have to file IT returns and wait for the refund. But for many other countries where there is no proper taxation treaties, then there is a tax here also, then they have to pay the tax in their home country. So from that perspective, coming through the Gift City is very simpler and easy. No taxation in India, no need of filing IT returns. And also for many, our second generation, third generation NRIs and other investors, they don't have a PAN. So to invest into Gift City, you don't need a PAN number. PAN is not mandatory. And hence, more and more investors can come in and invest into India through this Gift City route. NRE, NRO account is not mandatory. You can directly invest from your
Okay.
home country bank accounts. So, and tax, as I've already mentioned, no tax in India. So it doesn't need to worry about double taxation treaties, are they avoidance treaties there or not. So you can just directly come, invest, take the gains, and yes, you have to pay that tax in your home country, you pay it. If you are exempted, you don't need
Well
to
and
pay
good.
that. So it's a very simple and tax efficient route. Documentation is also as simple as that with any other investment which you would be making. And the global investment is another opportunities for all the NRIs. There also again NRIs, foreign investors, foreign companies, all of them can do it. So in the same source, you have same advisor could assist you in both your India investment as well as global investments, and completely no tax in India. So there is nothing to be worried even in global investments whether there will be any tax in India or any other outside India. Even outside India, well, there will not tax. India also no tax. All you have to pay the tax, if any, is in your home country.
Okay.
So
That,
it's a
that's
very
good to
simple
have.
fund. So investors should evaluate, because the saving on the tax, saving on the efforts which you have to put filing returns, catch hold of and chartered accountant to prepare your IT returns, file it, wait for refund. So all those hassles are no more going to be there if you choose to invest through Gift City.
Cool. Thank you. Thank you so much. I think I personally gained a lot of knowledge. I'm sure that audience also get to know this product on a little more detail. And at the same time, a lot of knowledge. And I hope that this will help people to think UCT as an opportunity and look a avenue for wealth creation.
So thank you very much, and thanks to you for giving me this opportunity to share my understanding with you and with all your investors.
Yeah, yeah, yeah.
So
Thank
happy to
you.
assist in any further
Yeah,
ways.
thank
Days
you,
to
thank you.
come.
I know it's a great thing. You just landed in Kerala and directly come here, so appreciated your effort for this. Yeah, thanks
Thank
for the
you
entire
and
team for doing this.
namaskaram.
Yeah, thank you. Namaskar, namaskar.